All right, y'all. So welcome in. It is Sunday, March 16th, 2025. I'm your host, Gerardo G. Money Pies. Welcome to the Trade Circle. And as always, right, the Trade Circle is an educational platform. We are learning here how to the markets move, how to read charts, how to trade, how to know how to risk manage, and all the good stuff that comes with trading. But again, right, we don't provide any. It may seem like it's financial advice, but we're not providing financial advice. Adventure advice is basically saying, use this lot size and move your stop loss to break even. Those kind of things right there are financial advice, kind of, towing the line there. But definitely know, that's what the whole purpose of this. So you guys can learn how to recharge to make decisions. And again, though, once you start to understand all of that, where to enter, where to exit, what lot size to use, how much money you have to be making, you'll start feeling more in control of your trading. And that's my goal, right? To make you feel that you're in control of these charts independently. We trade together, we learn and grow and trade together, but independently, we're stronger traders. And when we bring that string to the circle, it's definitely a recipe for a bigger success. But welcome in. Let's hit those C's, triple C's to represent. And let me find my notes. All right, so we're gonna go here with some, and I'll turn off my camera just so it won't get in the way of the recording. Okay, perfect. All right, we'll turn it off here for now. And yeah, so welcome is we're gonna understand market structure, understand the trend, market structure, and then also kind of put it back into our 204 box system. So for those of you who are paid subscribers, you should have access to this box system. If not, message me directly. Actually, no, if not, I believe in the check-in list, there's a way in there you can request the indicator, and I'll go add to you pretty quickly. But we're gonna tackle these a few things right here, right? Understanding the trend, market structure, and the 204 system. So introduction, right? The trend in the market structure is crucial for success in trading. These two elements work together, providing traders with a directional bias and a structured framework to analyze price movement. And obviously, to enhance precision, the box system that we have acts as a filter to maintain focus on relevant price action. That's really important, keeping things relevant, like what's happening now. All right, so lesson one here. So the trend is basically the direction of market movement, right? So what is a trend? A trend is an overall direction of price movement over time. Trends move through two key phases: the impulse or the expansion, a strong move in the direction of the trend, showing dominance by buyers or sellers. A correction or a retracement, the temporary pullback before price resumes the trend. Okay. So there's three types of trends we all know, right? It's an uptrend, a series of impulses up, followed by smaller corrections. A downtrend, series of impulses down, followed by smaller corrections up. And though it may seem like you've heard it before, but in reality, there are some key changes to those sentences right there. In the past, I actually used to teach this already talking about higher highs and higher lows, right? But higher highs and higher lows, which we'll get to shortly, that is market structure. Okay. When it comes to talking directly about the trend, it's impulse correction, impulse correction. Okay. So with a trend, we cannot, a trend does not provide a strategy. Okay. A trend helps traders determine whether to favor buying or selling. Does that make sense? I do have here a sideways trend, price moves within the range without a dominant direction. I try not to focus too much on it, but that is a type of trend. But see, that's by identifying the trend, that's what helps us determine whether to favor buying or selling, right? And that's important because we do have to have a bias of what's more dominant. Okay, what's more dominant for us. So just to kind of give you guys a visual example, right? So in an uptrend, right? We have a strong impulse up. Now remember, what does this line mean when you take it back to the chart? Well, this where the lines where the impulse started, right? If this were a price chart, if that line represent a history line, right? The lowest point represents a price level. Okay, let's call it 2,500. Okay. And this high point up here represented a higher price level, right? I'm using 3,000 since gold's at 3,000 now, right? So that's the impulse to the top side. Actually, let me do this. So every time we draw any types of patterns or anything, right? Make sure we always keep it visually to a price here, so we won't get lost. But that's an impulse, right? Actually, we don't even know if it's an impulse until we actually have a correction. Okay. And a correction is a temporary pullback before prices resume the trend. Okay. That's all it is. So then what happens from here, right? After here, so that's the impulse, the correction, and then we have another impulse, right? So the moves up are stronger than the moves down. Okay. Simple enough, right? Simple enough when it comes to understanding the trend. It's just where's the direction, or what should we favor, buyers or sellers? Okay. Buyers or sellers. All right. So we'll move on here. We do have to erase this here. These guides that I'm doing, they are going to be in PDF format pretty soon. Just me organizing them are is the current progress. Okay, so let's move on. We know what a trend is, right? So now let's try to understand market structure. Okay, it's the organization of price movement. Market structure is the organization of price movement into recognizable patterns. It defines structure within trends using the following key components: higher highs and higher lows in an uptrend, lower highs and lower lows in a downtrend. Okay. So how market structure works: if an uptrend, price forms higher highs and higher lows as buyers push price higher. Okay. In the downtrend, price forms lower lows and lower highs as sellers maintain control. So let's give a visual example right now. We already have it, right? This right here is an uptrend. Okay. How do we organize the movement? Right. So this was a low, this was a high, this is a higher low, right? And this is a higher high. And then this is a higher low and then a higher high. Okay. That is right there, right? So we have an uptrend, and now we can potentially plot the points. In a downtrend, okay. So in reality, it's this price is making lower lows and lower highs. Okay. That's what a downtrend is. So think about, like, I was looking for an analogy for this. And the good analogy for this is simply um, the highway, right? The highway is the trend. The highway is the trend. And we know in the highway, we can only go in one direction, right? Now, the exits, the stop signs, those are the structure, of the highway, letting us know, which direction to turn or go or wait or stop, or, whatever traffic lights do, right? So that's what it is. And I just thought about this, right? Consolidation, right, is when there's traffic. There's traffic. Even though we're going in the right direction, right? We're stopped because there's just so much traffic. But yeah, so that's the example here, that will allow us to separate both of them. So now let's put things together, right? Let's put things together and how we can use both information together. So combining the trend and market structure. So, right, the trend provides the overall direction. Market structure provides the framework. The impulses should create the higher highs and higher lows, and then the downs, lower lows and lower highs. Okay, the correction should maintain structure. Breaking previous structure levels indicate potential weakness. So we'll start there. Okay, we'll start there in that scenario. When it comes to the the structure, right? So we have a bullish structure. Price goes up, price goes down, price goes up, right? And basically these points here, the higher low points, they're the ones, when we think of a foundation, there's one thing about it that's pretty interesting, right? When you think of a foundation, and I'll ask a quick question here in the chat. Maybe you guys can participate a little bit here. When you guys think of a correction, I mean, excuse me, of a foundation, what's something that comes to mind right away? A foundation. Okay, dance is a house. A floor. What else? What else? Support. And now, what if you were to put a shape on everything you guys are commenting? What shape would that be? Hopefully, man. A line, okay. Absolutely, a line. But I was kind of thinking more of a horizontal line, right? A horizontal line. Wouldn't that describe a foundation? Something flat, okay? And I'm asking this just to kind of get the feedback and making sure I take this in the right direction, right? So when we think of a foundation in general, okay, we think of something that is flat, right? And this were a house, right? You want to build it on something, and somebody said box as well, right? So this is the foundation. You build on something strong, so then you can build, right, your house or whatever it is that you're building. Okay. Well, in trading, right, the foundation technically is not flat. Okay. The foundation for a uptrend is staggered this way, right? In this scenario. So having two higher lows, that's our foundation for a bullish trend. Okay. That's one way to see that, Trees. I do like that. You gotta have, well, that is technically market structure. Stairs are. And how are stairs held? Well, they're held in a foundation that way, right? The only difference, right, is that, well, it's actually the same thing, guys. Right? If this were candlesticks, this is how price technically likes to walk in rally-based rallies. So I'm just providing some visuals right now, just so we can have them. But is it making sense, right? So that is a stair foundation or a N wave or a zigzag. That is the foundation of a trend. Okay. So with that being said, let me erase this. That's the foundation we look for when it comes to the market being bullish or bearish. Do we have a few higher lows supporting us? If we do, right, we look for buys. Okay, we look for buys. And if we're in the opposite direction, right, we look for sells. Okay. So in this scenario here, right, the next retracement or the next correction should not go higher. If we do this higher low one, higher low two, should not go lower, excuse me, than this one. Yeah, see that? This foundation, this higher low, the price level of that foundation, let's call this price level 2200. That foundation should hold, right? Meaning that price cannot touch that price. So, excuse me, the correction should not reach 2,200. Now, I can get very near it, but it shouldn't. Okay. And then this is kind of where we find our turning points, right? In between that higher low and that higher high, and price goes up. And there's different areas where price can turn, right? So we have another impulse, correction, impulse. Sometimes we have some shallow corrections and they go higher. Sometimes we have, and let me just do another visual here, almost equal lows and then goes higher. So if this were if these were the corrections, right here, these areas, you see they're sometimes some are steeper than others for various reasons, right? Some are steeper than others for various reasons. But again, the structure or the foundation maintained, right? The structure and the foundation maintained. The low, the high, the higher low, and the higher high. That foundation didn't get broken. So change of trend or direction is a break of the foundation. That is a sign of it. Okay. So if we start breaking some higher low, once we start breaking higher lows, it's a sign that the momentum is shifting. Okay, a sign. And what I mean by sign, good question, because you're comprehending the information, right? So what I mean by this, well, there's some situations, right? Remember, we have to break, I guess you can say, two foundations. Okay. All structures are built on two foundations or two lows. There you go. There are scenarios where when price does this, it taps into the higher low, and then that's our strongest buy, right? When a lot of times people are calling this a break of structure or break of foundation, but in reality, I've seen it a lot of times. We'll do some back testing on this. When price just comes back, touches the higher low, or goes just a little bit lower, and then gives there you go, test the foundation. And we're creating new words as we, new terms as we to keep things simple. Yeah. Now, if price goes deep, and if it really does come back and get this one, now that's a sign that price could be turning, right? But good stuff. Good stuff. All right, so then right here, we always have to add the Fibonacci retracement tool. So the Fibonacci retracement tool aligns the trend with market structure to enhance trade timing and decision making. You see? So our Fibonacci tool is basically letting us know where to return. But we cannot use the Fibonacci retracement tool if we don't know how to find a higher low or a higher high or a high and low of a candlestick. Make sense? All right. Good stuff. Let's go ahead and shift over to the charts using our newly applied information as well, right? We're gonna use the box system that we have. I won't go into detail the box system because we did it last time, but let's go ahead and tackle these charts and see what the market has for us. All right. Let's go to a few pairs, guys. Okay, let me just move over here. Over here. We're gonna hide all drawings for now. So, obviously the box system that we use. Welcome in, guys. Let me see who else come in. Derek, Ms. Iris, welcome in as well. New people in here. Um, Marcus Field, welcome in, Mr. Marcus Field. Welcome in to the session. Yeah, so again, right, see, the box system that we have, right, the indicator that we like to use, create that filter, right? It creates that filter in not looking back way too much, right? Not looking back way too much. But at a glance, right? And this is the box system we use. We're going to focus on the bigger box for right now. Okay. And I'll purposely just go ahead and hide the other two boxes just so they won't get in the way. But here, right? What trend do you guys see in gold? Let's do a little bit of participation if you're able. Okay. What trend do you guys see in gold? Up or down? Up. Pretty straightforward, right? Now we know what a trend looks like. Price is making a higher push down. Okay. All right. And again, we're not worried about market structure right now. We're just worried about, okay, where is the trend? And if the trend is more up or bullish, well, we focus on buys, right? So let's see here. I'm going to go through a few charts. This is GBP USD on the daily chart. Okay. Notice the difference. And that's and just at a quick glance, right? Or just as a quick explanation, that is the power, guys, of that 204 box system, right? If we didn't have this system here, if we didn't have this filter here, and I remove the indicator, what are we going to start doing? What are we going to start doing here? We're going to start doing this, okay? We're going to start looking back and looking back and looking back and trying to find a trend, right? Well, no, that's the system just filters us. And let's just focus in here. In my opinion, that's a great system to have. Because how far are we going to look left, right? How far? I took some notes down. So I'm trying to create a system that all of us can see the same thing, right? And this look back period, this look back filter will let us know how far left to look back so we can just focus on that frame. Okay. So now look at GBP USD, right? GBP USD, it had a trend here, it got broken. It had a trend there, it got broken as well, right? So now this is the current trend for now. Okay, let's check out Euro USD. Same thing. Euro USD, it's a little funky. AUD USD. How do you guys see AUD USD? Would you say it's a little more bearish this one than the others? Yeah, it definitely does look more bearish, right? It definitely does look more bearish compared to Euro USD, compared to GBP USD, right? Now here's an interesting thing, right? Some pairs are slower than others. AUD USD is one that has the currency quote, the USD quote on it, right? So could it very be that you see where, and again, this goes back to keep it in mind that midpoint line, right? Notice how both Euro USD, they both went to their midpoint and surpassed it. This is GU. This is Euro USD. This is AUD USD. This one hasn't had it. So based on what I just said, what could we potentially look for AUD USD if it wants to follow GBP USD and Euro USD? Some buys, right? So from here to the midpoint, that's almost 200 pips. So that's maybe something we keep in our watch list for this week. All right, moving along. So this is NZD USD. NZD USD, very similar. So if you guys notice, the euro and the GBP USD, they look similar, right? The NZD USD and the AUD USD, the New Zealand and the Australian, they look very similar. All right, moving on. Here goes all the euro pairs coming on. If you guys want to, just for practice, on TradingView, you can create different watch lists, right? I believe I don't know exactly where you click sometimes. Create a new layout and do one called, I have this one, all pairs quote. In the very beginning, right, I used to alphabetize my charts based on the, if you look at a pair, right, you have your base and your quote. Well, in the past, right, I used to have, for example, all the if all the U I used to have it alphabetized based on the base, okay? But now I don't do that anymore. I do that all based on the quote. And why is that? Well, because the quote of a currency pair, of the pair, that determines the value. And basically, it makes it easier for us because all the values are the same regardless of the pair. So for example, right here, Euro USD, and this is a little side lesson. You guys want to just take note on this, okay? But everybody's following along so far when I say currency base and quote, right? A little side lesson. One of the things that we ask ourselves is, okay, what is the value of 1 pip when we use a standard lot size? Okay. And on gold, when we use one standard lot size, it's $10. Okay, everybody got that? We'll focus down here. It's a little small. I can't change the font on this, but it's right here. Okay, that's gold. $10. Well, because GP USD, because all these pairs here have the same quote, believe it or not, they all pay the same. So if I go to GU, focus right here in that little circle. Okay. GU, $10. Euro USD, $10. AUD USD, $10. NZD USD. That says a 10.01. We'll give it a break there. Everybody got it? So all of these pairs here, they all pay $10 per pip when we use a standard lot size. So that all of these euros here, they pay slightly different. 673. Okay, 673. Let's see what CAD JPY pays. 669, 673, 673, 673, 673. CAD was just a little off for whatever reason. The CADs, they all pay the same. 696, 696, and 6. So there you go, guys. That's kind of what I just wanted to show you guys right quick. Okay. And to me, that's, it's easier to lot size when you have them in this order, right? Because you can it creates a better lot size calculator because you know if you're trading the euro, but you see better opportunity with GJ because they all have the same quote. It's all good. I know what lot size to use to remain consistent. All right, let's keep moving on here and just kind of keep looking at the scenarios, and then we'll go into plotting some stuff, doing a little bit of back testing, and using the fib. And then we'll close out with some speculation with gold. But yeah, first 30 minutes went by pretty fast. So this is let's see here. The euro JPY is there. CAD JPY, DJ, these are not line up too much together. USD JPY, and like that. Okay. But again, right, this allows us, the yen actually looks more bearish to me. Yeah, the yen is very bearish. It's more bearish than bullish, for sure. All right, let's go in and see if we can find an example, okay, on what we were just talking about. So, and we'll focus here just to kind of keep this box in frame. All right, what do we see here for GBP USD? Clear bullish trend, right? Clear bullish trend. Now let's plot it. Okay, now let's plot it. So we're going to be doing our. Okay, so what supports a trend? Well, a trend line supports a trend. No pun intended, right? Well, there you go. So that's the reason why we call it a trend line, right? Because it supports the trend. Right? Now, a bullish trend is a series of higher highs and higher lows, right? And I'm going to do this just for consistency purposes, okay? Just to keep those same scenarios, like so. Okay. So notice that we have the impulse, boom, the correction, the impulse, the correction, the impulse, the correction. Notice how these foundations, right, kept price bullish. This was, let me see if this makes sense. You guys tell me, okay? And we're going to compare, and I'll do some color coding here. We'll color this one purple. Hopefully you guys can see that. And then we'll color this one orange. Which one was the stronger correction? The purple or the orange? Miss Letitia. Oh, yeah, the orange one, right? The orange one was a stronger one, right? Because why is that? Well, simply because, right, sellers were able to, right, bring price all the way down very near the higher low, a lot deeper. Okay. So this was the impulse, and it started from down here. The correction started from there, and it only provided that that correction. Look how far it is from the higher low, from the first higher low, right? And then it made another impulse, and then it made a very strong correction. And then price goes back up. So at simultaneously, right? This is where the fib comes in. And when we use the fib from higher low to higher high, can we put my basic fib in there without any extensions for now? Okay. So I have the fib from 1 to 0. Okay. From this higher low to the first higher high, price retraced 38% and shot up. Okay. Well, now we're going to extend the 0 to there. Actually, let me just be consistent. Now we're going to get a new fib from 1 to 0. Okay. And when I mean 1 to 0, I'm meaning that. Okay. On the fib levels. So now we got 1 to 0. And this one came all the way down to 78% and then shot up. Okay. And then last but not least, the 0 to 1, 1 to 0, excuse me, another 38%. Yep, institutional level Dr. Trees. Yeah, there is some uh meaning to that, right? As far as the percentage levels they're in. But we'll definitely go through that to another segment. But the trend identifies direction. The market structure allows us to find those important points. And then with the fib, we at least have an idea, right, where price could turn. All right. So in this scenario, right, we still look for buys, correct? What do you guys say? We look for buys? Absolutely. And that's the best thing we can do. So we'll measure from higher low to higher high. Okay. And where we're going to be looking for buys in this scenario? Where should we start looking for buys? There you go. Start looking for buys 382. If this were gold, 236. Right, Dan? The most forex pairs would be 382. Except gold and indices. All right, let's see what happens. Oof, came out very fast, 78%. So this higher low should hold. If it doesn't hold, we're still bullish because we need to break two foundations, right? And then here, I'll kind of go ahead and simplify things. I only follow two higher lows and two higher highs, or vice versa. I personally don't like to do this when I'm trading, okay? But at the same time, the frame window will let us know, right? But I only like to keep 4 points. That's all. All right, so let's see what happens. And again, let's keep in mind the frame and the midpoint. Actually, let me ask a question, which I think I already gave it to you guys. If this higher low does not hold, where could price go to and then maybe turn around? The midpoint. All right, let's see if it happens. Okay, it's not working. We got to the midpoint. Okay. And let's see what happens from here. Boom. Broke it. But notice how the midpoint, right? Notice how the midpoint made it challenging to break. You guys see that? Now we broke the foundation. Resistance. Absolutely. Support. It broke the support, but it was resistance. Yeah. So now we broke the foundation. Should we immediately start looking for sales? Remember, every time we break a foundation, there's usually a what? A very strong pullback. So this now can be considered an impulse. And a correction is coming. Now, this is the daily time frame. This works on every scale. This movement also works on any other pair and everything, but that's the concept there. So we broke the foundation. All right, let's hit play. Oops, let me back up a little bit. Right here. And it just missed the midpoint, Dr. Latrice. I thought it was going to touch it, but it actually turned a lot faster than I thought. And it almost came back to the midpoint. Now, at this point in time, we could also start measuring it with the fib from high to there. Okay. The 23% is present, and the midpoint is just, the 38% is just below the midpoint. And price turned it much sooner than we thought, which can happen, right? Which can happen. So now we have a new framework, right? Now we have lower lows, lower lows, higher lows. And this can just simply be a high. Okay. All of this stuff is, for the most part, broken. Cool. So now we're here, right? Remember, gold, I mean, GBP USD has been ranging a lot. So, just be mindful, right, of those things. This is just an example so you can visually see the structure and how they moves and so on and so forth. All right, let's see what it is now. We're here now. Okay. So we just hit this here. There is still a strong bearish foundation on this, right? It's just a matter of, okay, where can we turn? And that's what we'll analyze for the week. Alrighty. All right. So that's GBP USD. We'll take some glance here at some others and then kind of go back to and then wrap it up with gold. And let's look at actually no, based on the time, we'll do this here. We got to wrap up in 20 minutes. And by 8:30 we'll be wrapped up. All right, let me go ahead and this was a good example here for gold. Okay, what's the structure for gold? What is the structure for it? Bullish, right? Let's see how long gold has been bullish, y'all. Okay, so actually, I'll pause here for a second. So I do want to talk about this one more time, because what gold did is technically pretty historical, because it's been announced since a very long time. Okay. Right now, what you see in front of you is the monthly chart. Monthly. meaning that each candlestick represents a month. And this box that you see, it represents a year candle. So there are going to be 12 candlesticks inside of there representing the year. It's green because it was a bullish candle. It's red because it was a bearish candle. Everybody following along? So I began my trading journey April of 2018. Okay. I first got introduced to trading right here, that little dot. Sheesh. Somebody would just told me buy gold. I think I could have been rich by now. So the $1,500 increase. Let's see here. $1,500 is 15,000 pips, right? Correct me if I'm wrong, yo. I believe it is, right? We just add a zero. And if I put a 0.10, let's see. If I multiply to $15,000, that's not bad. If we would put a standard lot on there, just hey, set it and forget it. Put a standard lot in there. That would give us $150,000. Not bad. So let me see your Dr. Trees from here all the way up is an increase of 1,500 in dollars. I believe we just add a zero to give us the pips. I believe. Yeah, I can't think right now when it comes to that because there's just so many. But I believe so. Yeah. But yeah, pretty nice move, guys. So the year that I came in, it was a bearish year, and then bullish, and period of consolidation. This period right here was COVID year, right here, 2020. Wow. Daniela says, I remember people told me to buy Bitcoin. What the heck is Bitcoin back in the day? So this is 2020. Okay. And this is where it's very interesting, right? Where, and this is kind of very similar to what I've been talking to you guys about Tesla, right? It's just like the news is important. So here, when price during COVID and price broke a previous structure point, everybody here was saying gold to 3,000. And there was an article where Bank of America said gold to 3,000 back then, excuse me. So when you have news like that, and Bank of America is the one backing that up as well. Let's see here. Gold to 3,000. BOA says in 2020. I think there's an article about this. Yeah, in April 2020, Bank of America raises 18-month gold price target to 3,000 an ounce. Boomerang. Okay, so there were articles back there. Okay. There were articles back then, excuse me. Here goes. Gold prices to surge past 3K, says BOA. See what the comment says. Keep believing these posts put up by the gold mining companies. Then when is over. So you see how everybody can speculate on fundamentals. That's why it's really, really important to trade the charts. But regardless, right? This article came out, and what, based on what you guys are seeing in front of us, what technically happened to gold before it actually reached 3,000? Well, it dropped 22%. 22%. So imagine you take out a loan, you take out your life savings, and you put it out on gold because they set to 3,000, and you were going to increase your that account by 3,000, 44%. Like, oh man, put in there, put in there 200K. Well, you have 500K saved. And when gold reaches 3,000, you know, oh, I'll make some money. But instead, we got the opposite. It went down to 20, it went down 22%. So let's say we invested 250K. Okay, we all bought from here, right? And then you see your investment go down 20%. How do you start feeling there? What is 20% of 250? $50,000, right? Some people can hold, some people don't. And if you held, no problem. But again, though, this is kind of where the market, the banks, they want to squeeze us to where like, let me just see how long they can hold their breath, right? See how long they can hold their breath. And if you're too deep in the red, what do? If you're down 50K, what do? You get out. So what happens when you get out? What you're technically what? You're technically selling. You're selling to who? Bank of America. They're the ones, not just them specifically, institutions, the media, they're the ones that want to buy at a lower price. When that article came out, the gold price level was at 2,075. It went down to $1,614, right? And that's kind of how, that's why reading market structure is important. Now, granted, this is basically at an institutional scale, right? These market prices. But in trading, guys, we're only trading the decimals of decimals, right? We're not even trading pennies. We're trading 2 digits before pennies, the pips. And every chart creates structure, no matter what time frame it is. All we got to do is just know is buy low, sell high, basically. Buy low, sell high based on that structure that you see for yourself. Um, there's some good stuff, guys. Just knowing how to read a chart, right? Can create a conversation. but yeah, that's kind of what happens. That's how the market is. Okay, that's how the market is. And yeah, so then, people who bought when that article came out, they bought because of excitement. Price drops 20%. Some stayed, some got out, sold their position, and big money was more than happy to buy at that price level. And then from there, this was 2021, 2022. Here, I remember we were in the Bahamas. And then from there, price just skyrocketed. Awesome, Miss Tisha. Let me save this because this is, we'll save this here for us. All right. Let me also save this on my notes. All right, perfect. All right, let's move on. So let's see where gold is going to go. Using everything that we just learned and just trying to find, an area where we can trade towards and speculate. All right, perfect. So let's see here. So let's do some top-down analysis on gold. So again, right, I start from the daily chart. Okay. The daily chart frame is telling us buyers are in control. The trend is bullish. Okay, the trend is bullish on the daily scale. Now let's mark up our structure. I personally see this as a low, high, higher low, and higher high. Okay. Let's go to the 4-hour chart. The box will shrink, but still the same look back period on a 4-hour scale. And here, right, it actually at some point, here, it looks like we were below the midpoint. But at that time, okay, if I rewind all those candlesticks, see, we were above the midpoint. And the midpoint behaved like somewhat like a support, foundation support to move it up. Okay. I personally did have a few market structures being broken. And then check out this example right here, Dan. Not a few, excuse me, one. Okay. Because you asked me that question earlier, right? This is a low here. It's the 4-hour chart, right? Low. Okay. It's a high. It's a higher low. Okay. And it's a higher high. Higher low. Higher high. Okay. I did not count these highs up here as a new higher high because when we use the fib and everything, they have to reach a certain height before it we can actually call it a higher high. So these dots represent what we were just talking about, right? We have the last 4 points are the structure on the 4-hour chart. Everybody got that? And look, this wick here, it actually dipped into this foundation. It tested that foundation right there. Let me just do this. Right, price was not supposed to come to that area, but it did. And it's fine. Okay. It's fine if it does sometimes, but at least we know um, where that turning point is. And again, this is not break of structure from here, right? It's just that was the liquidity it needed, or that was the break of structure it needed to give us that. And that run was very nice. Okay, so 4 hour, and also too, just a note for you guys, right? When we do take out a low like this, right, this technically becomes that point, and we're there. Alrighty. So we're still bullish on this. Low, high, or low, or high. The one before the turn, Dr. Latrice, over here, or you're talking somewhere else? Just making sure I'm following. Okay, gotcha. So right in here, you see morning star pattern. Yep. Yeah, so the morning star, you'll find it a lot, Dr. Latrice, on bullish scenarios on higher lows. So when you have higher low structure, your morning stars are usually there. Is that correct, right? No, but yeah, so this is a morning star pattern right here, right? And the evening star is just the opposite. Yeah, so a lot of times you will be finding those like even here, like in this wick, or even right here in the lower scale. And then I just kind of put that to the test right here. Okay. Just so we can kind of just get some clarity on it. A lot of times you will see it's basically a doji tied to a bearish engulfing candle and a bullish engulfing candle. Just sometimes you got to just wiggle the charts a little bit to find a good. There he goes. Maybe 2 hours. No. So you see, you have strong price action down, couple of dojis, and then bullish price up. And a lot of times that is your higher low or lower high scenario. Even here, this is a form of a bullet morning star. Okay, good stuff. We're connecting it all back together. That's very, very important. All right. So now this is a structure that I see for gold. That followed by morning star followed by a rally base rally. There goes. That's the pattern Dr. Latrice has found for herself, which I've seen it. I've seen it in action. All right, so this is the fib that I have based on this this last structure point. Okay. And based on this fib, let me just quickly check where we're at on the extension. We're literally at the 272, 382 zones. Okay, so we're definitely at a higher high scenario. Okay, because we're in a bigger scale, and if we see the clues on the smaller time frame, this could be potentially an area to trade a correction. Okay, so that we can position ourselves for the next extension. Okay. Before I go even lower on lower time frames, let me mark up the weekly candlestick and the previous weekly high and low. Previous weekly high, previous weekly low, and I always like to get the open because I see there's a lot of volume at the open of price. And if you guys saw my I do my speculation, my weekly outlook on Mondays. I mentioned that on Monday that when the week started off, that we were below the open. If we can get back above the open, we're gonna go up, and that's what happens. So that's why I keep in touch the previous weekly open. Okay, just so those behave. That behaves like there's different foundations for everything, right? We have the structure foundation, we have the anatomy of a candlestick foundation, and basically, if it's a bullish week, the open and the previous weekly low is the foundation to keep price bullish. All right, but we're there. Let's go to the 4 hour where we were. Okay. And then now let's go to the 1 hour chart. And the 1 hour chart also is talking to us structure. Okay. Excuse me, bullish, right? It's staying also bullish. And we've got a nice little trend line here that supports that. It's very steep, to be honest. Pretty steep. Okay. For a trend line, all you got to do is find a low point, let it push up, let it push down, and there you go. So basically, the how do you connect the trend line is you find 2 points, and then that impulse from the start of that point should kind of create a higher high. Okay, and it's doing it. So this thing is still bullish. This thing is still bullish. We got some support and resistance to the left over here, but yeah, we just got to see how it plays out on the lower scales, and that's what we're analyzed in the week for us here. Okay, there is more analysis, but we will resume this during our live trading sessions and through our chat to kind of keep us going. But other than that, y'all, any sales that we see this week, in my opinion, are just a pullback on the higher time frame. So we'll see how it works out. Okay, you will see how it works out. Let me actually measure this, and I'll share this chart with you guys. All right, perfect. I like it. That's the truth. All right. My time is done here. Thank you guys for being here. I think we had a great session. Um, always learning, but always trying to keep it simple. Okay, trying to keep it simple for you guys to understand. And you know, again, if you guys are recently just signed up, we do thank you. There is a checklist for you guys to go through, so I can give you guys access to the box indicator. And yeah, I will be doing some minor updates here shortly to our system. First, going to get some consultation to my team to see kind of what they think. But other than that, you know, the whole purpose for this our circle, right, is to make sure we learn, make sure we're all looking at the same things we can effectively trade, right? The whole thing is, yes, let's get our education. Let's definitely learn how to read these charts, but we definitely want to come together. We'll return back tomorrow midday for a support call. Any questions you have there, we can go with. You can always invite people there for free, free of charge. We do have a free schedule for us to have, but any questions, definitely feel free to reach out directly through the application or through Telegram. And yeah, so thank you guys. Have a great Sunday morning. We'll see you on the next one. My pleasure, Marcus.